Hello students, how are you all? I hope you are doing well. The previous video of January 2025 RTP, we have solved questions till 7th problem. Now try to solve from 8th problem on. Try to solve from 8th problem on. Get the 8th problem, it is on the concept of bills of X. First one, on 1st April 2024, X sells goods to Y for 25,000 plus IGST at 18% and draws two bills of exchange on him. First of all, identify whether it is a trade bill or accommodation bill. To observe here, sale purchase transaction happened so that it is a trade bill. Yes or no, students? So he also charges IGST. Now, the first bill for 15,000. First of all, tell me for how much amount he draw a bill. Observe, bill amount is 25,000 plus 18% IGST. 25,000 into 18%, it comes around 4,500. So, total 29,500. For 29,500, we draw a bill. But here, what is happening? Here, we are drawing two bills. First bill for 15,000 for 2 months and second bill for the balance for 3 months. You observe, out of 29,500, we are drawing first bill for 15,000. What is the balance amount, students? 14,500. For this amount, we are drawing a second. And first bill is for 2 months due, 2 months due period, and second bill is due for 3 months. Fine. Now, Y accepts and returns these bills to X. Fine. Both the bills are sent to the bank for collection. You observe here, both the bills we have sent to bank for. Okay, fine. Next, on 1st April 2024, on 1st of April 2024, we have sent these bills to bank for collection. In due course, X receives the information from the bank on the due date of the respective bill that the bill for 15,000 has been duly met and the other bill has been dishonored. So here you should calculate due date of first bill and also second bill. Okay. If you observe, we have drawn bills on 1/4/2020. First bill is due for 2 months. So 1,000. Add 3 days grace. So 4 2024 is the due date of first bill and second bill is due for 3 months. Na? So that 4th 7 July 2024 is the due date for or no, students, 1 month later. Fine. Noting charges paid on the dishonor of second bill or 500. Who will pay noting charges? Tell me. First, bank will pay noting charges. After that, bank will deduct amount from X account. Pass the necessary journal entries along with narrations in the books of X. So here they are asking only the entries in the books of drawer. Yes or no, students? It's a simple problem, very simple problem. First of all, it is a trade bill, and if you observe, first time they have given a problem by adding, because GST concept they introduced, na, they have given like interesting. Identify. So in this bill of exchange problem, what we have to do? What is the approach we have to follow for bill of exchange problem? Read the problem line by line and identify the transaction in paragraph and record the entry for the paragraph. First, identify in whose books we have to record the. So we have to record the entries in the books of X. X is seller come drawer and Y is Y. Yes or no, students? Now look at one by one entry. What is the first transaction? Sale transaction. So we record the entry for sales first. What is the entry for sales? Y account debit to sales account 25,000 to output IGST account 18% 4,500. Okay, get this is the entry. Y account debit to sales account to output IGST account. Hope you understood. Next one. Next, we have drawn two bills. Bill 1, bill 2. Bill 1 is for 15,000, bill 2 is for 14,500, and we have sent these bills to Y, and Y also accepted these bills, and Y returned these bills to us. So it is bills receivable for us. So we record next entry for bills. So bills receivable number 1 account debit 50,000, bills receivable number 2 account debit total 29,000. Yes or no, students? Now, next entry. If you observe the paragraph, they said these two bills are sent to bank for, that is the next transaction. What is the entry for this? Bill sent to bank for collection debit to all bills. Bill number 1 and bill number 2 account credit. That's it. Well, so bill sent for collection account debit to bills receivable account number 1 and bill. Hope you are following, students. Next transaction, what happened? On the due date. See, we have sent bills to the bank now. So what bank will do? On the due date, bank will collect the amount and it is credited to the customer account. Now here on the due date, first bill is honored and second bill is dishonored. First bill honored, second bill dishonored. So, out of these two bills, first bill is due on 4th. We record the entry on 4th June because we have to follow chronological order. On 4th June, what happened? Sorry, 4th July. Yes, look at, students. Actually, the due date of bill is 4th June. Here by mistake they have given 4th July. Make a correction. So June 4th. June 4th. Bank collected this amount na. So bank account debit to bill sent for collection. So immediately on the due date of second bill. What is the due date for second bill? 1 month later na. So June, July. July 4th is the due date for second bill. You observe carefully. It is not August 4th. It is July. Second bill is dishonored. So what is the dishonor entry? Now we have to receive amount from Y. Y account debit to bill sent for bank account 14,500 and bank will pay noting charges na. So bank will deduct amount from our account to bank account 500. So we receive total amount from Y. Is it clear, students? That's it. The problem of bills of exchange. Very simple problem. If you get this type of problem in the final exam na, you can get easily 5 to or 7. Okay, right. Next question. Come to final accounts and rectification of error. Means the final accounts they may give you some. Now look at. So to solve final accounts problem, need to follow one approach. What is that approach, student? Generally, final accounts chapter they may ask trading account, profit and loss account, and balance sheet. Case of non-manufacturing. Case of manufacturing entities, they will ask. They may ask manufacturing account, trading account, profit and loss account, and balance sheet. Yes or no? This is the approach. First, you try to draw all the required formats. First, you try to draw all the required formats. Required formats. After that, you read the problem once. Just you go through the problem once, read once, and identify the adjustments. Mark the adjustment. Wherever necessary, we do the adjustment. So, after reading and understanding the problem, what we do is we try to solve the problem from beginning, first item onwards. Here, what is the first item? Stock on 1/4/2023. From this item, we start one by one and we end up with the bank over. So, after reading each item, you need to identify in place of final accounts, this item is suppose stock on 1/4/2023. Here, the closing date is 31st. This is opening stock. Opening stock is recorded in trading account debit side. Yes or no, generally? So, that is why this is how we prepare financial statements. Becomes very easy for us and we can complete this problem within time same time with accuracy also. So here we need two things. One, need to complete the problem within time plus with accuracy. Yes or no, students? Now look at this problem. On 31st March 2024, the trial balance of Mr. Robin was as follows. The trial balance, look at the items first. Stock on 1/4/2023. Raw materials 30,000. Work in progress 2,85,000. Finished goods 4,65,000. These three are opening stock. Raw material, work in progress, and finished is inventory. Opening inventory. Next, debtors, carriage on purchases, bills receivable, wages, salaries, telephone and internet charges, repairs to office, furniture, repair to office furniture, cash at bank, office furniture. Okay, like this, we have various items. Fine. Okay, this is our trial balance. Okay, check whether trial balance is agreed or not. Yes, 90,000. Sorry, 90 lakh. Fine. Look at the adjustments one by one. The following additional information is available. Stock on 31st March. This is closing inventory information. Raw material we have this much. Finished goods and work in progress. You observe closing stock they are giving raw material, finished goods, work in progress means they are going to ask you to prepare manufacturing. Yes or no? Yes. Next look at. So what is the final output? Prepare the manufacturing account, trading account, and profit and loss account for the year ended 31st March. So you people first draw all the required formats: manufacturing account, trading account, profit and loss account, and balance sheet. Here balance sheet they didn't ask. Fine, very good. So only manufacturing account, trading account, profit and loss account. Fine. If you want, you can prepare balance sheet also. Problem at all. You need not to prepare in the examination. For practice purpose, you can prepare. Now, next look at first you prepare manufacturing account, trading account, profit and loss account. After drawing all the required formats, now look at we write one by one item in the required appropriate place. First, stock on 1/4/2023. Stock on 1/4/2023. This is opening inventory. Opening inventory. Raw material and work in progress are shown on the debit side of manufacturing account, and finished goods are shown on the debit side of trading account. Yes or no? First, we show these three items. Get very logically we have to complete. See, not only final accounts problem, student, but also NPO problem. Plus, accounts from incomplete problem also we will should complete in that manner. Okay. Now look at first one. The books of Mr. Robin, manufacturing account for the year ended 31st March 2000. Writing heading is very important. Now, first, raw material. Raw material consumed, we have a formula. Opening stock of raw material plus purchases minus closing stock of raw material. Or no? Yes. So, out of that, they have given opening stock of raw material 6,30,000. Next, opening stock of work in progress. That means opening work in progress, next item. So, two opening work in progress, 2,85,000. Next, we have opening stock now. So, go to trading account to debit side. Go it. Two opening stock of finish. That's it. All the three items are shown on the appropriate. Next one. Next, they have given sundry debtors. So, identify if you have any adjustment for sundry debtors. Let it be. Sundry debtors anyway we have to show on the liability asset side of balance sheet. Asset side of balance sheet. But here, what is the adjustment we have? We have adjustment of provision. I think a provision for doubtful debts is to be maintained at 1% of sale. Generally, provision is maintained on the closing value of debtors, but they said provision is maintained on 1% of sales. If we identify sales, then after we can get provision. Fine. Look at the next item, students. Anyway, debtors you need not to show. It is shown on the asset side of balance sheet. You can ignore because they didn't ask any balance sheet. Next one, carriage on purchase. It is treated as expense relating to purchase. So debit side of it 45,000. Next one, salaries. Sorry, bills receivable. Bills receivable is shown on the asset side of balance sheet. Next one, wages. Wages are direct expenses. Is direct wages. So two wages. How much we have? 3 lakh 9. Next one, Salaries. Salaries are shown on the debit side of P&L account. Debit side of P&L account. Yeah, fine. Next one. Telephone and internet charges. This is also expenditure and shown on the debit side of P&L account. Fine. Next one. Repairs to office furniture. It is also expense. So debit. Repairs to office furniture. Next one. Cash at bank, office furniture. These two items are balance sheet items. Balance sheet items. But if you observe, on office furniture, we have to provide some depreciation. On office furniture, we have to provide depreciation. So, what is the percentage of depreciation? Identify student. Machinery is to be depreciated. Okay. Office furniture 7.5%. Machinery is to be depreciated by 10% and office furniture by 7.5%. We have to calculate depreciation 7.5%. Tell me, what is the value of furniture? What is the value of furniture? Look at, 3 lakhs. 3 lakhs into 7.5%. Lakhs into 22,500. Depreciation on office furniture. Depreciation on office furniture. Here, if you want, you can write lakhs into 7 point. So, in the balance sheet, we show this furniture again on the assets side, 3 lakhs minus 500. Repairs to plant. Generally, repairs to plant. Plant is used in the manufacturing process. So, that's why the repairs to plant also taken to the manufacturing account at 1000. So, go to manufacturing account. Go to manufacturing accounts. Repairs to plant. Yes or no? Purchases. Purchases of stock. So, add to the raw material purchase. Two purchases. 20 lakh, 25 lakh. Next one. Plant and machinery. Plant and machinery is asset shown on the assets side of balance sheet. Observe, on plant and machinery we have 10%. How much? 2 lakh, sorry, 2 lakh 10,000 rupees. Generally, depreciation on plant and machinery we transfer to the P&L account. Here, the plant and machinery is being used in manufacturing process. So, this is transferred to the manufacturing account. Sir, no students, this is very important. Depreciation of plant 21 lakh 10%. After providing depreciation on the asset side of balance sheet, so plant and machinery 21 lakh minus 2 lakh 10,000. Rent. Rent is 1 lakh 80,000. But regarding rent, we have some adjustment. Look at, regarding rent, we have some adjustment. What is that? Rent is to be charged as to 3/4 to factory and 1/4. So out of the rent paid, 3/4 is relating to factory. So it is shown on the debit side of manufacturing account. 1/4 to very good. So what's the total rent paid? Total rent paid 1 lakh 80,000. So out of 1 lakh 80,000, fourth. So 1 lakh 80,000 into 1 lakh 30, and remaining 1/4 P&L account debit side. Remaining 1/4 P&L account debit side. Observe, like 80,000. Is it clear, students? Next one. Lighting. Lighting also 40,000, total 40,500 paid. So see the adjustment for lighting. Lighting is to be charged as to 2/3 to factory and 1/3 to office. 2/3 to factory, that means manufacturing account. 1/3 to office. 40,500 shown on the debit side of P&L account, and remaining amount 13,500. Remaining amount Lighting 40,000 to 2 by 27,000. Yes or no, students? General expenses, yes, P&L account debit. General expenses, P&L account debit to general expense. That's it. Debit side items. Credit side items, look at sundry creditors. It's a balance sheet item. Credit side. Bills payable, balance sheet item. Sorry, liability side of the balance sheet. Sale of scrap. Sale of scrap shown on the credit side of manufacturing. Observe manufacturing account. Sale of scrap. Observe manufacturing account. Sale of scrap. By sale of 75. Next one. Commission received. It's a P&L account item. So you can see on the credit side of P&L account. Next, provision for doubtful debts. Look at students. Already how much provision we have? 49,500 provision we 49,500 provision we have. Get so here we have provision for provision for doubtful debt. Provision for doubtful debt. Observe students. How much we have already? 49,000. 49,500 we have. 49,500. Yes or no? Yes. Now they said provide depreciation 1% on sales. You observe sales are 50 lakh 60,000. 50 lakh 60,000 into 1% comes around 50,160. So 50,160 is the closing balance we have to show. To balance C by D 50,160. So the required provision is 50,160, whereas already we are maintaining 49,500 provision. So 50,160 minus 49,500, 49,500, remaining 660 rupees we transfer to the P&L account. For this, what is the entry we record? Provision for doubtful debts account debit to profit and loss account. Hope you understood this one. Now look at P&L account debit side. P&L account debit side. To provision for doubtful debts. This is the required provision minus already maintained provision. We understood. This is over. Capital account, balance sheet item, liabilities side. Next, sales. P&L account, sorry, trading account credit side. So, trading account credit side. Yes, sales. Like six. Yes or no, students? Next one, sales over bank overdraft. It is balance sheet item, liability side. So, we have completed this trial balance. We have completed this trial balance. Next, look at closing information they have given. Raw material closing inventory. Yes. So, it is deducted from raw material consumed. So, and again, the same closing stock is shown on the asset side of balance sheet. Next one, finished goods trading account credit side. Work in progress. Yes, it is on the credit side of manufacturing accounts. Okay. Next, salaries and wages unpaid for the year ended. Yeah, here outstanding salary 27,000, outstanding wages 60,000. So that wages are added to already paid wages 60,000. Then total wages becomes 4,50,000. The same time salaries are added in the P&L account because outstanding now. Yes, outstanding 37. Then total salary becomes like 27,000. Next one. Machinery depreciation completed, provision completed, rent completed, lighting completed. That's it. Student. So now you can balance. Now you can balance this manufacturing account. You get cost of goods manufactured, not cost of goods produced. Cost of goods produced or cost of goods manufactured, and this is transferred to the trading account to debit side. This is transferred to the trading account debit side. Cost of goods transferred from manufacturing. Here we get gross profit, and this gross profit is transferred to the handle. Here we get net profit. To do calculation, net profit, and this net profit is to the balance sheet. This is our final accounts. Next one, financial statements of not for profit organization, NPO. This problem is also very interesting. NPO, all problems of NPO are very interesting when you involve. Otherwise, they becomes very little bit difficult. And the approach for NPO problem also same. So first we draft all the required formats, and after we solve problem from beginning. Here they may ask two types of problems. One, they give you receipts and payments account, and you will be asked one expenditure account and balance sheet. Okay, yeah. Or else they may give you income and expenditure account, and they will ask prepare receipts and payments account and okay. Now look at this is the problem of have given receipts and payments account, and we have to prepare one expenditure account and balance sheet. Right. Now look at the following is the receipts and payments account of Masters Club for the year ended on 31st March 2000. When you are solving NPO problems, try to identify what is current year and what is the previous year and what is the next year. So here they have given receipts and payments account. Receipts and payments account contains opening balance of cash, closing balance of cash, and debit side revenue receipts less credit side revenue expenses and capital expenses. While we are preparing income and expenditure account from receipts and payments account, we have to take only revenue items. Capital items are not taken to the income and expenditure account. Same time, opening balance and closing balance of cash also not taken to the income and expenditure. Yes or no, students? So here they have given receipts and payments account. This is opening balance, subscription, sale of refreshment, entrance fees, interest on 7%, interest on investments at 7%, salaries, supply of refreshment, okay, sports equipment, purchase, telephone charges, electricity charges, honorarium charges by balance. So opening balance, closing balance. Opening balance is shown on the asset side of opening balance sheet. Closing balance sheet is shown on the side of closing balance sheet. So what are the various adjustments they have given? Observe additional information. Following are the assets and liabilities on 31st March 2000. 31st March 2023, but opening for the current year. Closing for the next year becomes opening for the current. So on opening date, we have assets, sports equipment, subscription, furniture, and at the same time we have some liabilities. First, whatever the information you have on 31st March 2023, with this you can prepare opening balance sheet. Next, following are the assets and liabilities on 31st March 2020. On this date, on this date, whatever the assets and liabilities we have, with that you prepare closing balance sheet. No, student. Now look at 50% of the entrance fees capitalized. Actually, they have given entrance fees of rupees 26,000. Out of this, 50% they said capitalized. So add 50% to the capital. Remaining 50% is shown on the credit side of income and expenditure. Yes or no? Next one. Next adjustment. Interest on the investment is being received in full, and the investments have been made on 1st April, beginning of almost in the previous year. The previous 142. Can you tell me how much is investment? How much is investment? I didn't give na. Have to calculate. You are required to prepare income and expenditure account and closing balance sheet as of 31st March 2024 in the books of master and expenditure account and balance sheet. You observe in the entire problem they didn't give any capital fund information. So obviously you have to calculate capital fund by preparing opening balance sheet. The difference between assets and liabilities becomes yes or no students. Get this two balance BYD, take it to the assets side of balance sheet, opening balance sheet, that's the side of. First, writing heading is very important, students. In the books of Masters Club, the books of Masters Club, income and expenditure account for the year ended on 31st March 2024. At the same time, balance sheet as at 31st March 2004. Next, yes, opening balance sheet on 31st March 2000 and investment calculation. Next one, calculation of depreciation on sports equipment. Here they have given some working notes, student. Calculation of depreciation, furniture, subscription to be created to income and expenditure. Next, electricity charges to be debited to income and expenditure. They have given some little bit lengthy calculations. Okay. Required formats have been prepared. So I will explain the important adjustments. Remaining you can solve it. Okay. First one, two balance B by D. Take it to the opening balance sheet. Asset side subscription. So here I will prepare subscription accounts. Subscription. Subscription account. Here subscription we have received. Subscription we have received. How much amount received? 23,000. It is receipt na credit. Is receipt credit side. Next one. Sale of refreshment, take it to the credit side of income and expenditure account. Next, entrance fees. Out of entrance fees of 26,000, 13,000 is taken to the credit side of income and expenditure account and 13,000 added to the capital fund over. Next, interest on investment at 7%. Here they have given interest amount and they said the rate of interest, and also they have given full interest is full interest is. So make it to by using these two information we calculate now the value of investment. What is the value of investment? How can we calculate? Simple, 4,000. What is the interest amount? 4,000. So here itself we can calculate 4,550 the interest received divided by 7%. Automatically you get the investment value divided by 7. So the investment value is 65,000. Investment value is 65,000. Hope you understood. Investment value is 65,000. Is it clear? And this 65,000 is shown on the asset side of balance sheet, opening and closing. Opening and closing. Don't forget. Next one. Salaries and wages, take it to the debit side of income and expenditure account. Supply of refreshment, take it to the debit side of income and expenditure account. Next up, supply of refreshment, 18,000. Okay, 250. Sports equipment, 27,000. Sports equipment, 27,000. Telephone charges, 2,800. Electricity, honorarium. Now, here sports equipment, how much we have? 27,500 purchase. You observe, there is one adjustment for sports equipment. Look at, already at the beginning of the year, we have sports equipment 30,000. The beginning of the year, we have sports equipment 32,000. During the year, we have purchased 37,500. And at the end, sports equipment, we have 50,500. Both together, should have 32,000 plus 27,500. Total, we should have 59,500 students, but we have only to the extent of 50,500. So that 9,000 is nothing but depreciation on sports. Working note you can find the end of the problem. Or no? So 9,000 is taken to the common expense account which side. So depreciation. They have given total depreciation. Here you have working note. Working note. Yes or no, students? Telephone charges, income and expenditure account, debit side. Electricity charges, income and expenditure account, debit side. Honorarium, income and expenditure account, debit side. Buy balance, C by D, 1100, closing balance sheet. Per. Next. Here they have given some adjustment. So whatever the assets and liabilities we have on opening date, present them the opening balance sheet. So sports equipment, opening balance sheet asset, subscription in arrears, 7,600. Opening balance sheet asset. Now these arrears are at the beginning of the year. So this we show on the debit side of, because what is the adjustment entry that we have been recorded in the last year for outstanding subscription. So outstanding subscription account debit to yes or no. Now, whatever the closing entries we have been recorded for all expenses and revenues, they become opening entries or they become simply reverse in the next financial. So, during that process, for this 7,600 rupees, what is the entry we record? Subscription account debit to outstanding subscription account 7,600. That's it. What? Next one. Furniture, we understood you can solve the adjustment 12,080. Now, outstanding electricity charges. Electricity charges outstanding how much? 5,400. How much amount they have given here? We have paid 15,600 electricity expenses. 15,600. Out of 15,600, 5,400 relating to previous year, na? So 1,200 less. Current year outstanding 3,800. So total 14,000 rupees we wait on the debit side of one expenditure. About out. Next. Here they have given subscription in advance 6,250. It is shown on the liability side of balance sheet, opening balance sheet. Now the same 6,250 becomes reverse the current year because it is previous year amount. Current year amount we have received the previous year. Current year amount we have received in the previous year. So previous year we deducted from subscription. So current year we add it. Next one. Now, yeah, these are the assets and liabilities at the end of the year. Sports equipment, closing balance sheet, asset, subscription in arrears, 5,200. This is current year outstanding, na? So subscription account credit side 5,002 and closing balance sheet asset side. Next, subscription received in advance 4,850. We deduct 4,000 and the same 4,850 we show on the liability side of. Now closing balance sheet. Now you simply balance 6,250, 23,000 plus 5,200 minus 7,600 minus 4,008. So 22,000 rupees subscription we transfer to the fund expense account. Yes or no, students? Right. 22,000 rupees transfer to the next one. So entrance fees we discussed and investments also we discussed. So you people try to solve it. Nothing in this problem new to understand. Next one, accounts from incomplete records. Accounts from incomplete records. So final accounts problem, final accounts of sole proprietor, NPO, and accounts from incomplete records. These three looks similar, but the information which they provide is different. Yes or no, students? But the method strategy is similar. Now, following is the incomplete information of moonlight traders. Sir, what is the strategy to solve this incomplete records problem? Well, mainly the requirement is what? Trading account, profit and loss account, and balance sheet. Trading account, profit and loss account, and balance sheet. Apart from these, compulsorily prepare debtors account. We have bills receivable account, Creditors account, we have bills payable account. At the same time, we also prepare bank summary. Bank summary. If any opening or closing balance of cash is not given, these five accounts compulsorily we have to prepare as working note. Apart from this, any working note required, we have to prepare. Or no? Same. Here, whatever the item they have given, follow this same approach from the beginning onwards. From the beginning onwards. First, read the problem, try to understand, and your work. Right. The following balances are available as on 31st March 2023 and 31st March 2020. This is opening and this is closing. Yes or no? So, on opening date, whatever we have assets and liabilities, with this you can prepare opening balance sheet. Opening balance sheet to know the opening capital, not fund, opening capital. Yes or no? And whatever the assets and liabilities we have at the end, show them on the closing balance sheet. Yes or no, students? Get here. Land. They have given land. Opening balance sheet. Opening balance sheet. Asset side. Land opening balance sheet asset side. Opening balance sheet asset side. Next, plant and machinery opening balance sheet asset side. Office equipment opening balance sheet asset side. Debtors they didn't give. You need to calculate how much of debtors we have at the beginning of the year. Next, creditor for purchases opening balance sheet. Creditor for office expenses opening balance sheet liability. And surprisingly, you have to prepare debtor account as working note and creditor account as work. Clear. At the same time, creditor for office expenses also as working note. Next, stock they didn't give opening stock. Yes or no? So that you have to prepare. You should identify opening stock also. Now on 31st March 2024, they have given land. Same amount they have given so that you have to provide depreciation. Plant and machinery 2,30,000 rupees. That means there is some change in the plant. Next, office equipment 85,000 rupees. Maybe there is a change. Next, debtors closing balance we have 2,25,000. This is shown on the asset side of balance sheet at the closing, and the same is shown as closing balance of debtors account. Closing balance of debtors account. Next, creditor for purchases they didn't give. You should calculate. Maybe the balance of creditor account becomes closing balance of debtors. Creditor for office expenses they have given. Stock. This is closing stock shown on the trade side of trading account and asset side of balance sheet, as you know very well. Next one, they said long term loan from FBI at 12%. Loan 1,60,000 opening balance sheet liability, and bank balance we have 25,000 opening balance sheet asset. At the end we have 1 lakh rupee loan. Have repaid some loan. Have repaid some loan. You have to observe. This 1 lakh is shown on the liability side of closing balance sheet, and you observe the bank balance is missing. So that you have to prepare bank account. Need to identify. They have given some other information. Look at other information and adjustment. It's little bit. It looks like little bit lengthy problem. Is it clear? Next one. Collection from debtors. Collection from debtors. First, bank account debit side we record. After that, debtor account credit side. The entry for this bank account debit to collection from debtors or debtors account. Same is posted into bank account debit side, debtor account credit side. Next, payment to creditor for purchases. So for this transaction, what is the entry we record? Creditor account debit to bank. Same is posted into bank account debit side working note and creditor account credit side of bank account and debit side of creditor account. Next, payment of office expenses excluding interest on loan. Payment of office expenses excluding interest on loan 40,000. Already we have prepared one account creditor for office expenses. Creditor for office expenses. In this account we post that. Okay, next salary paid. What is the entry we record? salary account debit to bank account. Salary account debit to bank account. So bank account credit. Salary is expense. So again shown on the debit side of general account. Or no? Next one. Selling expenses. Same. Selling expenses account debit to bank account. Selling expenses account debit to bank account. So bank account credit side, general account debit side. Cash sales. Cash sales. What's the entry we record? Bank account debit to sales account. Cash account debit to sales account. Next, credit sales. 80% of total sales. This is very important. Credit sales are 80% of total sales. Credit sales are 80% of total. So what about remaining 20% cash sales? Remaining 20% are cash sales. So here cash sales are given 2,50,000 divided by 20%. So total sales becomes cash sales 2,50,000 divided by, they said credit sales are 80% of total sales. That means cash sales are 20%. Na? So 2,50,000 divided by 20%, we get 12,50,000 rupees as total sales. Total sales. So out of 12,50,000, 80% is credit sales. So your credit sales becomes 10 lakhs. What this is important work. So what is the entry for credit sales, students? Customers account debit to sales account or debtors account debit to sales account. This is the entry we record, the entry we post into debtor account debit side. And observe cash sales and credit sales both together are shown on the credit side of trading account. So trading account credit side we show total 12. Next one. Credit purchases are 5 lakh 40. Credit purchases they have given 5 lakh 40. Cash purchases 40% of total purchase. So out of total purchases, 40% is cash purchase. What about remaining 60% purchases, trade purchases? Huh? So this 5 lakh 40,000 is equal to 60%. Equal to 60%. Now make it 100% student. 5 lakh 40 divided by 60%. How much you get? 5 lakh 40,000 divided by 60. Total you get 9 lakhs rupees. Total 9 lakh sales. Sorry, purchases. Total 9 lakh purchases. So out of 9 lakh, 40% is, out of 9 lakh, 40% is 3 lakh 30. So 3 lakh, 3 lakh 60. 3 lakh 60,000 is your, yes or no? So credit and cash both are shown on the debit side of trading account. Credit purchases 5 lakh 40,000 rupees shown on the credit side of debtor account, and cash purchases, cash book, credit side. Next, gross margin at cost plus 25%. Gross margin at cost plus 25%. This information is given to calculate opening stock. Opening stock. Observe students. Here we have purchase information, sales information, closing stock information, and they said gross profit is 20% plus cost plus 20%. 25% on cost is equal to 20% on sale. Yes or no? We know this conversion. No? 25% on cost is equal to 20% on sales. If you observe the trading account of Moonlight, the trading account looks like this. Okay. The books of Moonlight Traders, trading account for the year ended 31st March 2020. Observe sales 12 lakh 50,000, purchases 9 lakh, closing stock they have already given 65,000. Now 12 lakh 50,000 into 20% is your gross profit. Lakh, the balancing figure is nothing but stock. This opening stock is shown on the assets side of opening balance. Yes sir. Logic. Hope you understood this. Very, very logical. NPO problem and from incomplete problem are very logical. Next, discount allowed. First, tell me what is the entry for discount allowed. Discount allowed account debit to debtor account. Now, first post this entry into debtor account credit side. Now, discount allowed is financial expense, finance expense. So, P&L account debit side. Discount received entry. Creditor account debit to discount received. So, creditor account debit side you give posting. Discount received is gain, na? Come na? Gain. So, P&L account credit side. Next, depreciation to be provided as follows. Plant and machinery 10%. Office equipment can calculate easily. Next, other adjustments look at on 1/10/2023 they sold machine having book value 40,000. So here you can prepare machinery account. Let me show the machinery account here itself. So when I open machinery account, opening balance how much? 2 lakh 20. Closing balance is how much? 3 lakh 30. They said 40,000 worth of machine was sold. So 40,000 worth of machine was sold. Cost. So 40,000 cost of machine sold. For how much? As on 31st March 2023, at a loss of 15,000. At a loss of 15, sir, no, how much amount we receive? 25. How much amount we receive? 25,000. 40,000 is the book value. As on what date? On 1st October 2023, they sold machine having book value 40,000. As on 31st March 2003, on this date we have book value. Now, from 31st March 2023, you have to calculate depreciation. 1/10/2000 till 1/10/2020. For 6 months, you have to calculate depreciation. 40,000 minus depreciation, we get the book value of asset. 40,000 minus depreciation, get book value of asset. So from that book value of asset to that book value of asset, deduct 15,000 rupees, meaning nothing. Sale value. Sale value of the. So 15,000 is loss shown on the debit side of P&L. Look at plant and machinery account. To plant and machinery. This is total sales and total purchases calculation. Office expense. Fine. Important calculations I am showing students. Get 2 lakh 20. By sale 40,000. By balance dividing purchases 1 lakh 50. 1 lakh 50,000. So look at depreciation. Look at sale of machine. Okay, sale of machinery account they have prepared separately. So that in the P&L plant and machinery account 40,000 straight away they deducted. 40,000 straight away they deducted. And the difference 1 lakh 50,000 is nothing but purchase. Purchase. Okay. Next one look at sale of machinery they transferred 40,000, and on 40,000 rupees we should calculate depreciation for 6 months. The depreciation is nothing but 2,000 rupees. And what is the book value now? 8,000. Minus we sold at loss now 15,000. So how much amount we received? 23,000. Be clear, this is sale of machinery account. New machine was purchased on 1/1/2024. So on new machine, how much value of new machine purchased? 1,50,000. On that we should calculate depreciation for 3 months because they purchased on 1/1/2024. Now calculate depreciation for 3 months. Next, office equipment was sold at its book value on 1/4/2020. Office equipment was sold at its book value on 1/4/2023. So accordingly we have to do the working note. Next, loan was partly repaid on 31/3/2024 together with interest for the year. Observe. So loan account, how much balance we have? Loan account. Loan account we have 1,60,000 rupees. So on 1,60,000 rupees to 12%, 19,200 rupees is the interest. Remaining balance, how much principal amount repaid? Look at the loan account. Here they have given so many accounts to students. You can observe. So bank loan and interest, how much? 60,000 principal paid and 19,000 interest. Total 70. Okay, this is our problem, student. Bank account they have given sundry creditors, sundry debtors. Opening balance sheet. Opening balance sheet important item is stock. 1 lakh 60. Next, depreciation on office equipment. Yes, this is also over. Depreciation on plant and machinery on 1 lakh 80,000. Full year depreciation on 1 lakh 50,000. 3 months depreciation 40,000, which we have sold on that 6 months. Uh, Calculations already we have seen. So out of the working notes, you get the missing amounts that you can check. Next problem, look at. So here I am explaining the important areas of the RTP student. So remaining you can solve, no problem. Now partnership accounts, come to partnership account. Profit and loss appropriation account. Profit and loss appropriation account. Next look at P&L appropriation account. Problem based on P&L appropriation account. This is interesting, students. Look at Akbar and Bali are partners in a firm sharing profits and losses equally. Fine. On 1st April 2023, the balance of their capital accounts were Akbar, Bali, 30 and 40. On that date, the balances of their current accounts were Akbar 10,000 credit, Bali 3,000 debit. Interest at 5% per annum is to be allowed on the balance of capital accounts as on 1/4/2023 opening balances. Means they are following fixed capital method, students. Bali is to get annual salary of 3,000 which had not been withdrawn. Fine. Drawings of Akbar and Bali during the year were 1,000 and 2,000 respectively. The profit for the year ended 31st March before charging interest on capital, but after charging Bali's salary was 70,000. Okay, fine. Okay. Before deduction of Bali salary, the profit is 70,000 rupees. He is decided to transfer 10% of divisible profit to a reserve account. Prepare profit and loss appropriation account. Okay, fine. And show capital and current accounts of partners. This is very simple problem, students. First of all, come from the beginning of the problem. They have given opening balances of capital and current accounts. Now, so go to profit and loss account and current accounts. Profit and loss account and current accounts. So, out of the problems, accounts from incomplete problem is very lengthy. Yeah. To get partners capital account, opening balances are 50,000 and 40,000, and current account balances are 10,000 debit Akbar, Bali 3,000. Yes or no, student? Now look at, and the profit is 70,000 rupees after charging Bali's salary. So what is Bali's salary? Annual salary 3,000 rupees. So we have to take 70,000 plus 3,000. Total 73,000 rupees profit we have to show the credit side of profit and loss appropriation account. Get profit and loss appropriation account 73. From here we do the adjustment. Okay, Bali's salary is how much? 3,000. And interest on capital they said 5% now, 5%. So 50,000 into 5%, 1,500. Next 40,000 into 5%, 2,000. The same is given credit to current accounts. Okay, total 4,500. Next one they said, okay, they said drawings, but they didn't say about any interest on drawings. And they said 10% out of 10% should be transferred to the divisible reserve out of divisible profits. Fine. So first calculate what is the divisible profit. Divisible profit is nothing but after doing all the adjustments in the P&L appropriation account, whatever the balance left, that is called a divisible profit because that balance is distributed among partners. Now here 73,000 minus 3,000 minus 4,500. The divisible profit is 65,500 students. divisible profit is 65,500 into 10%. 6,550 is transferred to the reserve. 1,550. Remaining balance 58,000. Remaining balance 58,950. 58,950. This is distributed among partners as per agreed ratio. How they are going to distribute profits equally? So divided by 2. 29,475 rupees is transferred to the, okay, so in the partner capital account, only capital balances are shown. Remaining all transactions are routed through current account. Well, by interest, salary, and profit. So here they have withdrawn 1,000, 1,000 debit and balance it. Okay. Next problem, calculation of goodwill, students. Calculation of goodwill. Here, the following information given below. Total asset, external liability. Here you get capital employed na 10 lakh minus 1 lakh 80,000. 8 lakh 80,000. Next, normal rate of return 10%. On that 10% is 88,000 normal profit. Average net profit of last 5 years 1 lakh. Okay, you are required to calculate goodwill by capitalization method and 3 years purchase of super profit. Capitalization method and 3 years purchase of super profit. Right. So, first, what is the capital employed here? 8 lakh 80,000. Capital employed 8 lakh 80. Normal rate of return is 10% and average net profit is 10 lakhs. So, capitalize this amount. So, 1 lakh divided by 10%, that comes around 10 lakhs. Nothing but what? To earn this much of profit of 1 lakh at a normal rate of 10%, how much capital you have to invest? So make it 100%, 10 lakhs. So what is the difference here? 1 lakh 20,000. This 1 lakh 20,000 is nothing but your goodwill. That's it. Simple calculation. Right? So capital employed, sorry, 8 lakh 20,000. No? Okay, 10 lakh minus 1 lakh 80,000. Okay, 8 lakh 20,000. So that goodwill is 1 lakh 80. 8 lakh 20,000. Normal profit 82. Okay, super profit. Okay, goodwill. Yeah, look at this. Goodwill is 1 lakh 80. Is it clear, students? Now, super profit is how much? 18,000. How super profit is calculated? Normal profit is 10 lakh. Sorry. Average profit is 10 lakh. And what is the normal profit? On the capital employed, on the capital employed, we get 10% normal profit. Capital employed is 8 lakh 20,000 into 10%. 80. Calculate super profit. Average profit minus normal profit, 1 lakh minus 82,000. 3 years purchase of super profit. So 18,000 into 3 years. Is it clear, students? So this is our goodwill problem. Next one. Admission and retirement of a partner problem. Right. Case of admission and retirement, we have to do certain adjustments. Yes. First adjustment, revaluation of assets and liabilities. Next adjustment, goodwill. Next adjustment, distribution of reserves, undistributed profits to partners. Next, capital adjustments. So like this, we have to do and profit sharing ratios. Fine. Now look at SB and Co is partnership firm with partners Mr. X, Y, and Z, sharing profits and losses in the ratio of 10, 6, 4. Or we can also write 5, 3, or no. Next, the balance sheet of the firm as at 31st March 2024 is as under what date? 31st March 2020. Okay, fine. This is the balance sheet. Land, building, plant and machinery, furniture, investments, inventories, trade receivable. Fine. Capital X, Y, Z, reserves. Reserves 60,000. Suppose regarding reserves, if you don't get any information, even though these reserves are distributed to the old partners, their old profit sharing ratio. And long term debt, bank overdraft, trade payables. Fine. This is our balance sheet. Next one. It was mutually agreed that Mr. Y will retire from partnership and in his place Mr. P will be admitted as a partner with effect from 1st April 2024. Who is retiring? Y is retiring and in his place Mr. P is admitted. So it is admission come retirement problem. For this purpose, the following adjustments are to be made. Fine. Goodwill is to be valued at 3 lakh, but the same will not appear as an asset in the books of the reconstituted. So here the total value of goodwill is 3 lakhs. Now calculate sacrificing ratio or gaining ratio, whatever it may be. Accordingly, this bill is distributed to the partners. Next, building and plant and machinery are to be depreciated by 5% and 20% respectively. So here building value decrease, debit. Revaluation account, debit. Plant and machinery also decrease. So revaluation account, debit. Next one. Investments are to be taken over by the retiring partner 45,000. So actually investment value is how much? Investment value 36,000, but the partner is taking these investments at 45,000. So what is the profit here? 9,000 rupees is the profit. That profit is transferred to the revaluation. Next one. Provision of 20% is to be made to trade receivables to cover doubtful debts. Trade receivable of 4 lakh 17,000 into 20%. So 83,400 we have to create provision. So revaluation account debit 83,400. That's it. Apart from this, there is no adjustment for revaluation. Fine. So revaluation account balance, we get a loss, and that loss is distributed among partners. To whom? X, Y, Z, not to P. Because P is a new partner, now. Yes. So this is distributed. For this, what is the entry we record? Revaluation. Sorry, partners capital account debit to revaluation. In the reconstituted firm, the total. Okay, we see the goodwill adjustment also. Fine. So what's the profit sharing ratio? New profit sharing ratio is 2 to 1. 2 by 5, 2 by 5, 1 by 5. So with this, you can calculate sacrificing ratio. See the a minute, they didn't give any profit sharing ratio. So here I will calculate. No worry. You get here we have X, Y, Z. What's the old ratio? Old ratio is 5 by 10. Let me check. 10, 6, 4 means 5, 3, 2. 5 by 10. 5 by 10, 3 by 10, by 10, nil. New ratio. Who is retiring? Y is retiring. So by 5, by 5. Yes or no? Now you can calculate sacrificing or gaining ratio. So 5 by 10 minus 2 by 5. How much we get? 5 minus by. Here we are using the formula old minus new. When you do old minus new, you get sacrificing rate. Sir, no? So 1 by 10 y, 3 by 10 sacrifice, z, 2 by 10 minus y, get 10, 2 minus 4. So minus 2 by, so he got this much gain. And p minus 1 by 5. Two equal denominators, multiply here 2 by 2. So we get 2 by 10. Observe here, y sacrificed 3 by 10 and x sacrificed 1 by 10. Total share sacrificed 4 by 10. Here z got 2 by 10 and p also got 2 by 10. Now 4 lakhs is the goodwill. 4 lakhs is the goodwill. And out of this 1 by 10 is for 40,000 and 4 lakh into by 10. Much 1 lakh 20. So here for goodwill, we do the simple calculation, students. First, we distribute 3 lakhs to x, y, z according to 5 is to 3 is to 2 ratio. So how much we get? 3 lakh into, so yeah, 1 lakh 50. 1 lakh 50,000 and 3 lakh into 3 by 90,000. 1 3 lakh into by 10. Yes or no? Now the same 2 lakhs we write off 2 to 1 except to y. We distribute these 3 lakhs to x, z and p in 2 to 1 ratio. 3 lakhs into 2 by 5 lakh 20,000 and here nil. Here also 1 lakh 20. Here we get, observe students, here 30,000 rupees will get 1,000 rupees and here it is 90,000. Here we have 6,000 rupees and here we have 6. Yes or no? So x will get 30,000, y will get 90,000 and this is given by z and p 1006. What is the entry we record? Z capital account debit, P capital account debit 60 to X capital account and to Y capital account. This is the adjustment we do. Get X capital credit 30 90. Here this is the adjustment. And they said 6 lakh we have to do capital adjustments. Lakhs capital so this 6 lakh capital adjustment is which ratio? 2 to 1 ratio. So lakh 40, lakh 40 and 1 lakh 20. 2 to 1 ratio. So accordingly, after posting all these things, the final balances are 31,200, 2 lakh 34,480 and 1 lakh 8. Yes or no? So the bank balance nothing but lakh 13. Here they are saying the surplus funds, if any, will be used for repaying bank overdraft. Here X, Y and X, Z and P, they are bringing some amount now, so that the excess funds we will utilize for repaying overdraft purpose. Next, the amount due for retiring partner shall be transferred to his loan account. At present, whatever the amount due to the retiring partner, we are not paying any amount and we are just transferring to his loan account. So to know the final outstanding of Z balance, Y balance Y account, 1,68,000 rupees is total, 50,000 capital, reserve profit 18,000 and reserve 18,000 and goodwill share 9. Total 1,60,000. Now for that revaluation loss he has to bear for 4,720 and investment he is taking at 75. What is the final amount due? 68,000. Now accordingly we do the balance sheet. So you can prepare the balance sheet here. So preparation of balance sheet at this situation, for this situation is easy, student. How? 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 Because why? Because from the opening balance sheet, by looking at opening balance sheet, that means the balance sheet given in the problem, prepare closing balance. Observe land, but at the time of preparation of this changed amounts we have to change. Any amount is changed, then we have to do accordingly. Okay. So based on that, this balance sheet is next one. Next problem. So they have asked revaluation account, partners capital accounts, bank account, and balance sheet. Next, dissolution of partnership. See, from dissolution of partnership, they may give you two types of problem. One, for closing all the books of accounts. Close all the books of accounts. They give you this for complete dissolution. Next, they give you piecemeal distribution problem. Piecemeal distribution problem. Out of two types of problem, they may give you any type of problem. Look at Neptune, Jupiter, Venus, and Pluto had been carrying on business in partnership, sharing profits and losses in the ratio of 3 to 1 1. They decide to dissolve the partnership on the basis of the following balance sheet as on 30th April 2020. What is their profit sharing ratio? 3 to 1 1. Here they have assets. So, in the dissolution process, what is the first step we have to do? First, transfer all the assets except bank balance and partner debit balances and some losses to the realization account. So, here we have premises, furniture, stock, debtors. Bank balance, open bank account separately. Capital overdrawn, don't transfer. Now, these things transfer to the P&L, sorry, realization account. Observe, realization account, debit side, premises, furniture, stock, sundry debtors. Here, next. Bank account you open separately, and these capital accounts you show it in the capital balances. Now come to liabilities side. Capital balances don't transfer to realization account, open capital accounts. So capital account, credit side, Neptune balance 1 lakh, Jupiter 60. Debit side, Venus 10,000, Pluto 12,000. Observe here, two parties, means two partners, accounts showing debit balances. Debit balances. Yes or no, students? Next, general reserve, distribute to the partners. Capital reserve, distribute to the partners. Sundry creditors, transfer to realization account. Mortgage loan, transfer to realization account. Next, the assets were realized as under debtor, stock, furniture, premises. What is the entry we record here? Bank account debit to realization account. Bank account debit to realization account. Look at realization account credit side. These assets are realized 1 lakh 9. Next one. Expenses of dissolution amounted to 4,000. What is the entry we record? Realization account debit to bank account 4,000 rupees. Realization account debit to bank account 4,000. Next one. Further creditors. Further creditors means unrecorded creditors. Further creditors means unrecorded creditors. Already how much amount we have to pay to the creditors? 20,000. Further creditors how much? 12,000 had to be met. Total creditors payable 32,000 students. So we are making payment to total creditors. What is the entry we record? Realization account debit to bank. They have said general reserve, unlike capital reserve, was built up by appropriation of profits. Appropriation of profits. To transfer these balances to partners' capital accounts, get partner opening balances. Next, closing balance, general reserve and capital reserve. General reserve computed according to 2211, sorry, 3211. Capital reserve also 3211. That's it. You are required to drop the realization account, partners' capital accounts, bank account, assuming that Venus became insolvent and nothing was realized from his private asset. Venus became insolvent. Right. Here we apply Garner versus Murray rule. Apply the principles laid down in Garner versus Murray. Simple problem, students. Very, very simple problem. Get. So realization account is completed now. You have completed realization account. Find out the balance in realization account and distribute it to the partners. So here we have a loss. Observe carefully. And this loss is transferred to all partners. First, loss is transferred to all partners. Over. Now bank account, look at 8,000 opening balance. It's realized. Payments made 32, 4,000 and 80,000. Now wait for some time. Now this realization loss is transferred. 4,000, 36,000, 18,000 and 18,000. Here if you observe, who became insolvent? Venus. First you balance Venus account. First you balance Venus account. What is the balance in Venus account now? What is the balance of Venus account? This is the balance, no? 11,143 and 6875. How much is balance? Look at, okay, here we can get debit balance already we have 10,000 less realization loss 11 18,000 minus general reserve share and capital reserve share 10,000. Total 18,000 is the amount receivable from Venus. This amount Venus is unable to bring because he is became insolvent. Nothing is realized from his asset. Now who has to bear this 18,000 rupees? Important aspect. Now here the remaining three partners. Who are the remaining three partners? Neptune, Neptune, Jupiter, and Pluto. As per Garner versus Murray rule, the partner whose account is showing debit balance before insolvent of any partner. Now we will not ask him any amount to bear the loss of solvent partner. That's why we will not ask Pluto to bear the loss of who will bear loss of Venus Moon and according to what ratio, sir? Their capital ratio. Here we are not maintaining capital accounts under fixed capital method. In case of fixed capital method, we follow fixed capitals. But here we have to adjust some things and after that we should calculate capital ratio. In this problem that is very important. Opening capital 1 lakh and 60. General reserve distributed. Yes, 24,000. Right? 24 and 16,000. Capital reserve 16. After that, the capitals became 1 lakh 30 and 8. What is the ratio? 13 and 8. 18,000 is shared among partners according to this. What is the entry we record? Neptune capital account debit 11,143. Jupiter capital account debit 6,857. To Venus capital account 18,000. This entry, all the Venus account, and here Pluto is not solvent. So whatever the amount Pluto should bring, he will bring. After that, we balance each partner capital accounts, and if any partner is to bring amount, will bring, or finally we settle all the partners. That's it. Yes or no, students? This is very simple problem. Next, issue and forfeiture of shares. Company accounts. We entered into the company accounts. Issue, forfeiture, and shares. Look at the first problem. Kunal Fortune Limited invited applications for issuing 30,000 equity shares of rupees 10 each. The amount was payable as follows. Application 1, allotment 2, first call 3, second and final call 4. Here there is no premium. Fine. The issue was fully subscribed. So what is the entry we record first? What is the sequence of entries we have to record? First, receipt of application money. Now transfer that application money to capital. Second, allotment amount due. Now receipt of allotment amount. Next, first call amount due. Next, receipt of first call. Next, second call amount due. Receipt of second and final. So how many installments we have? 4 installment. For each installment we have to write 2 entries. 4 into 2, 8. First locate application and allotment. So here the subscription is full subscription. Fortunately, we don't have any over subscription. Okay. First entry. First entry. In the books of Kunal Fortune Limited. Journal entries. Bank account debit 30,000 to equity share application. How many shares we have issued? 30,000. To application money 1 rupee. Now we transfer this application money to capital. So equity share application account debit to equity share. Next, allotment amount due. Allotment amount is due on 30,000 shares at 2 rupees. So 6,000 rupees. Equity share allotment account debit. Equity share allotment account debit to equity share capital account. Next, receipt of allotment money. Now here we have to check whether all the allotment money received or not. Here the problem comes. Arun, to whom 300 shares were allotted, failed to pay the allotment money and his shares were forfeited immediately after the allotment. Arun, to whom 300 shares were allotted. So, total we have issued 30,000 shares. On that 300 shares we are not receiving money. So that we receive money on 29,700 shares into 2, 59,400. Get bank account debit 59,400 to the share allotment. Can also write the same entry in different manner because whatever the arrears amount we have on 300 shares, 300 into 2, 600 rupees, that can be transferred to calls in arrears account. Or You need not to transfer that amount to calls in arrears account. Why? Because immediately we are cancelling, forfeiting the shares of Mr. Arun. So that you can write this entry. Some students they may write this entry also. There is no wrong in that. Okay. Now immediately we are cancelling his shares. What is the forfeiture entry we record? Well, equity share capital account debit. Number of shares forfeited 300 to what is the called up amount. Here amount is very important. Entry can be written by anybody, but amounts are very. So 300 shares into what is the called up amount till allotment? 2 rupees plus 1 rupee, 3 rupees. Total 2 equity share allotment. How much amount not received on allotment? 300 shares into 2. And whatever the amount paid by the shareholder that is transferred to. Right? Share. The same entry can be written. Suppose if you have already transferred arrears amount to calls in arrears account, then calls in arrears account is great. So how the entry will be? Equity share capital account debit 900. Share forfeited 300 calls in arrears 6. Now 300 shares of Arun forfeit. After that, first call amount to due. Now from now onwards, we got the entries for 29,700 shares. Why? Because 300 shares are. Now equity share first call account debit 29,700 shares into what is the amount? So that we get 9,001. Next, two equity share capital 89,000. Now we have to receive 89,100 from shareholders. 89,100 from shareholders. Observe whether we are receiving or not. Ajit, to whom 450 shares were allotted, failed to pay the first call. Fine. So 29,700 minus 450 shares. 29,000. Now we receive amount on 29,250 shares. So 29,252 rupees. We receive 87,750. Bank account debit to equity share. Or else you can write this entry also. Arrears of rupees 1350 you can transfer to Kalsin. Now, his shares were forfeited, na? Yes. What is the forfeiture entry? Equity share capital account debit. How many shares we are cancelling? 450. What is the called up amount till first call? 7 rupees. 3 first call, 2 allotment, 1 to 7 rupees. 450 into 7 rupees, na? 3 plus 2 plus 1. 450 into 6. 1007. Out of that, how much amount we have not received? 1350. That is transferred to, that is cancelled. Equity share first call. And remaining amount received 1350 is transferred to account. Now, can you tell me how much amount we have in forfeiture account? 300 of Arun shares and 30 of Ajit shares. Total we have 16 balance. Next one. Final call due. Now 29,250 remaining shares we have. Total 30,000 minus 300 Arun shares forfeited. 29,700 minus 450 shares Ajit forfeited. Remaining shares are 29,000. Now, afterwards, the second and final call was made. What is the entry? Second equity share, second and final call account to debit to equity share capital account 29,250 into 4 rupees. 29,254. 1,17,000 to equity share. Observe on how many shares we have not received amount. Mohan, to whom 150 shares were allotted, failed to pay the second and final. Fine. So 150 shares reduced 29,100. We receive amount on 29,100 into 4. 1,16,400 rupees. 1,16,400 to equity share second and final. Next. Or you can transfer that arrears amount to also in arrears. Now finally we are going to forfeit the shares of Mohan. Fine. Now what is the entry we record? Equity share capital account debit. How many shares we are cancelling? 100 into called up amount till final call 10 rupees. Sorry, 150 no. 150 into 10. How much amount we haven't received? 600 rupees. So equity share second and final call. And received amount transferred to balance. Now check whether all these shares are reissued or not. These shares were also forfeited. All the forfeited shares were reissued at 9 per share, fully paid up. So 1 rupee discount we have given. Yes, this discount we set off against forfeited shares account balance. How many shares forfeited till now? 300, 450, and 150. Total 7, 8, 900. 900 shares forfeited and 900 shares we are reissuing. Fine. Bank account debit. How much amount we received? 900 into 9. 8,100 rupees. 8,100 we receive. Next, 1 rupee discount na. So 900 into 1 rupee. 900 rupees. The 2 equity share capital. So the discount on reissue of forfeited shares or to be set off should set off against share forfeit. Now how much balance we have in share forfeiture account? 600, 150 plus 900. Total we have 600, 1500, 2850. I hope. 100 plus 2850 total balance minus 900 of now. 1350 only. Yes. One 300 now. One how much? 300, not 600. It is 550. 550 minus 900. It is the balance of share forfeited account is transferred to capital. The final entry we record. This is very simple problem. Here you can see working out. Fine. One look at bonus issue and redemption of preference. Bonus issue and redemption of preference. Bonus issue and redemption of preference. Fine. The following is the summarized balance sheet of Trinity Limited as at 31st March 2023. So here we have share capital authorized 10,000 10% redeemable preference shares and 90,000 equity shares. Okay, total 10 lakh to do subscribed. Yes, 10,000 10% redeemable preference shares fully paid up. 10,000 equity shares of rupees 10 each fully paid up. Okay, total 2 lakhs. Okay, fine. Reserves and surplus, look at general reserve we have 1 lakh 20, securities premium 70, plant and profit and loss account 18,500, total this much. Current liabilities and provisions 11,500. This is liabilities side. Look at assets. Here they have given the balance sheet differently, students. Fixed assets 3 lakhs, depreciation, accumulated depreciation 1 lakh, total 2 lakhs. Investments 1 lakh, fine. Current assets and loans and advances 45,000, trade receivable, okay. Cash balance we have. Fine. This is the balance sheet just. Now, for the year that ended 31st March 2024, the company made a net profit of 35,000. Net profit of 35,000 after providing 20,000 depreciation. Provided, okay, profit current year 35,000 we have. The following additional information is available with regard to company's operation. This problem they have given something differently, students. Differently, observe carefully. The preference dividend for the year ended 31st 3 2024 was paid. We have to pay preference dividend. First, calculate how much preference dividend we have to pay. Preference share capital 1 lakh into what is the rate of fixed dividend 10%. So that 10,000 we have to pay preference dividend. What is the entry we record? Preference dividend account debit to bank account or dividend account debit to bank account. The entry we record. Except cash and bank balances, other current assets and current liabilities as on 31st March 2024 was same as on 31st March 2000. Fine. Except bank balance. Remaining all are same. Okay, no problem. The company redeemed the preference shares at a premium of 10%. Now we are going to redeem preference shares. How much face value? Yes. Before redemption of preference shares, check two things. One, whatever the preference share capital you are going to redeem, you have to replace the same amount of capital. This is the condition, student, as per section 50. Whatever the preference share capital you are going to redeem, same amount of face value of capital. Here we take face value of capital, you must replace it. On the other hand, check the cash balance also, because to repay we need cash now. So for redemption, how much amount we need? 1 lakh plus premium 10%. Total we need 1 lakh 10,000. Total we need 1 lakh 10,000 rupees. So carefully. This is cash balance. We need this much of capital we need to replace. Two conditions must be satisfied. Yes or no? The company issued bonus shares in the ratio of 2 share for every equity share held on the first month. So they have issued bonus shares. Fine. To meet the cash requirements of redemption, companies sold investment, because we need funds now. Companies sold investment. Investments were sold at 90% of cost. First of all, tell me what is the cost value of investment? 1 lakh. So sold at 90%. So 90,000 rupees. Have a loss of 10,000. So first to set off this loss. First of set off this loss. So P&L account debit to investments account, or P&L account debit to, and just a minute. P&L account. Yeah. You get bank account debit 90,000. Profit and loss account debit 10,000 to investments. Is it clear? Now, whatever the amount due to preference shareholders, transfer that amount to their account. Preference share capital account debit 1 lakh 10,000 to bank account. Like, now, how this capital is replaced? We are issuing fresh shares. How? Look at. So total we need 1 lakh 10,000. Total we need 1 lakh 10,000 minus how much amount received from investments? 90,000. More we need 20,000 rupees. Already we have some balance in bank account now. That means we have sufficient cash balance. Means here we are not going to issue any fresh shares. Here we are not going to issue any fresh shares. Means here the company is going to redeem its preference shares out of profits. We have two ways of redemption of, one out of fresh issue of shares, second one out of profits. Here they didn't discuss about any fresh issue of shares. For the for redemption purpose, they sold all the investments, so we have sufficient cash balance. Means they are redeeming preference shares out of profits. When you are redeeming out of profits, face value, full amount of face value of redeemable preference shares transfer to CRR. Transfer to CRR. For that, what is the entry we got? General Reserve account debit 1 lakh to capital redemption reserve. Yes or no? Now make payment to preference shareholders. Yeah. Here already we paid amount to preference. Due entry is a due entry. 10% redeemable preference share capital 1 lakh. Premium 10,000. Total amount 1 lakh. We have paid dividend, na? Dividend account debit to bank. Now this dividend we set off against general account balance, profit and loss account balance to dividend account. Next one, and this premium whatever we have, that premium we have to set off against P&L account balance. So profit and loss account balance to account debit to premium on redemption of. Next one, this is over. This is over, and last one. Now we have to issue bonus shares. How many equity shares we have? 10,000. 10,000 equity. How many equity shares we have? 10,000. And what is the bonus ratio here? Bonus ratio 2 shares. 2 shares for every share held. That means bonus ratio is 2 is to 1. So the 20,000 bonus shares we have to issue. 20,000 into 10 rupees pays you 2 lakhs rupees. So we need total 2 lakhs rupees. Now we have to transfer this 2 lakhs rupees bonus from various reserves. So here just now we have created capital reserve redemption reserve. Capital redemption reserve account is utilized to issue bonus shares now. So CRR account debit 1 lakh we have. Securities premium 70,000 we have, that can we also use place, and general reserve 20,000, and remaining balance we can take from profit and loss account. Now finally issue bonus shares to equity holders. Bonus to equity shareholders account debit to equity share capital. Our bonus issue, redemption of issue of debentures. Look at issue of debentures problem. On 1st April 2023, Globex Limited took over assets of 9 lakhs and liabilities of 1 lakh 20,000 of Hanuman Limited for the purchase consideration of 8 lakh 80,000. But still now we have to record the entry. What is the entry we record? We have purchased business. Na? So assets account debit 9 lakhs, liabilities account credit 1 lakh 20,000. Look at 9 lakhs rupees assets. On the other hand, we have to pay 1 lakh 20,000 rupees liabilities and 8 lakh 80,000 rupees as purchase consideration. You observe assets received are less. Assets received are less than amounts payable. In that case, the difference of 1 lakh is loss, that we treat it as. Finally, what is the entry we record? Assets account debit 9 lakhs, goodwill account debit 1 lakh, 2 liabilities account 1 lakh 20, 2 who is this Himalayan Limited 8 lakh 8. That is the entry we record. So, country assets account debit, goodwill account debit to Himalayan Limited 8 lakh 80, 2 liabilities. 3 liabilities 1. Now, what is the amount payable to Himalayan Limited? 8 lakh 80,000 rupees. Here the question comes, how many debentures we have to issue? Here the concept is two of debentures for consideration other than cash. Sir, no? Right. Here the number of debentures to be issued depends on the issue price. Here the number of debentures to be issued depends on the issue price. So it paid the purchase consideration by issuing 8% debentures of rupees 100 each, the 10% premium on the 8% debentures. 100 face value 10 rupees premium. So that what is the issue price? 110. So how many debentures we issue? Oh, 8,000 debentures. So 8 lakh 80,000 divided by 110. 8,000 debentures. For that, what is the entry we record? Himalayan Limited account debit 8 lakh 80,000 to 8% debentures. 8,000 debentures into face value 100 x, and extra 80,000 is securities premium transfer to securities premium account 8. This is the entry for issue of debenture other than next one. XY Limited issued another 6,008% debentures of 100 at a discount of 10% redeemable at a premium of 5% after 5 years. So here we also issued 6,000 debentures. So 6,000 debentures at what price? 10% discount means 90 rupees we receive. Bank account debit to debenture application account. Bank account debit, bank account debit 1 lakh 80,000. So 1,000 debentures. Like 80. Okay, sorry. According to the terms of the issue, 30 is payable on application and the balance on allotment on debentures. 30 rupees na? Fine. So 6,000 into 30 rupees. 1,000 into 30. 1 lakh 80,000 we receive. Now this debenture application money we transfer to debentures account. So debenture application money debit 1 lakh 80,000 to debentures account 1 lakh 80. Now the balance of 70 rupees we receive on allotment. First record the entry for allotment due. Debenture allotment account debit 6,000 debentures into 70 rupees. 3 lakh 6,000 rupees. Lakh 20. 10 rupees discount na? How much amount we receive? 3 lakh 60,000. Remaining 10 rupees is loss. So this is discount. Discount is loss, so that loss on issue of debentures account debit. Here we have two losses, students. One, discount loss. How much is discount loss? 30,000 into 10, 30,000 rupees discount loss. And at the time of redemption of debentures, the time of redemption of debentures are going to redeem at 5% premium. Total 6 lakhs into 5%, 30,000 is the premium payable. This premium we are recognizing now itself by following concept of prudence concept or principle of conservatism. The total loss is 90,000 rupees. 1,000 discount loss, 30,000 premium on redemption of ventures loss. Total 90,000. So carefully. To 8% debentures, 1,000 into here we have to credit 70. 50 rupees earlier credit, 1 lakh 80. Now 70 rupees credit, 4 lakh 20. Be clear. Premium on redemption of debentures is a liability for us. So 30,000 credit. This is very important. Be clear. Now receipt of debenture allotment. Bank account debit 3 lakh 60,000 to debenture allotment. Next they said it has been decided to write off the entire loss on issue of discount the current year itself. Generally, this loss is set off over a period of debenture life. But company decided to write off the total 90,000 rupees in the first year itself. So what is the entry we record? Profit and loss account debit to loss on issue of debenture. This is also very simple problems of debenture. So these are our RTP explanation, students. Now here they have given right short on notes on going concern concept, objective of accounting standard, retirement of bills of exchange, importance of bank reconciliation to industrial units. These questions you can. So again we meet in a new video, students. Till then, bye bye everyone. Don't forget to subscribe my channel, and that's it. Okay. Thank you everybody.